We are already running slightly late, and I would like to invite my distinguished panelists just to come, please, to the stage. We're going to start this second day of the Global Infrastructure Basel Summit with a panel in two parts around the topic of creating good livelihoods. I think it is very, very important, as we've seen already yesterday, that efforts are taken to facilitate, to create what we would call livable cities, which includes, one, the right concern to social necessities and services, but also to the infrastructure made available to allow for sustainable lifestyles. And hence, I'm very pleased in this first part, where we would like to talk about how to translate idea to reality, because that's the real challenge here. Is I think we all agree this needs to be done, to actually understand how some cities and organizations are. Sorry, do we have a? Is it okay? Yes. How we can actually fund such visionary projects. Because as we all know, and that is a very important topic of the GIB, we are really faced with the challenge that important funding needs are coming up to actually do that. Now, let me first quickly introduce my different panelists. First of all, I'm very pleased to have the Executive Mayor Ramokgopa from Tshwane in South Africa here with us. And then I'm very pleased also to have Pei Xiao, Vice Chairman of the Shanghai Municipal Commission of City Development and Management in Shanghai with us. And lastly, I'm also very pleased to have Kuhndt, Director of the Collaborating Center on Sustainable Consumption and Production from Wuppertal with us. Perhaps shortly introducing, I'm very pleased because I had the chance already to meet Executive Mayor Ramokgopa last year already, discussing about projects. So here we have two cities which have shown many visionary ideas and wishes to translate. So I think it will be very interesting to actually get from them their input. And then lastly, to hear from Kuhndt, what are some challenges and what could be some action plans to actually not only develop livable cities, but actually integrate into that the development of sustainable consumption and also the infrastructure for that. Here I will stop and I invite Executive Mayor Ramokgopa to actually address us. You're free from here or there as you like. Thank you very much.
Thank you very much for the opportunity. Let me take this moment to extend my warm and sincere greetings to everyone. Good morning. I thought that in less than 2 minutes, I want to frame the discussion by just exposing some of the challenges that are facing us at the local state when we want to make sure that you move from ideation to the realization of some of these big ideas. And really the intention is to make sure that you begin to resolve the social problem that exists at the municipal level. I mean, the first point to make is the following, is that in our city, we are of the considered opinion that cities are sites for experimentation and also constitute labs for innovation. So you must continuously seek new ways of resolving existing challenges and also projecting some of the challenges that might arise in the future and also try to mitigate or influence their direction. So in essence, we are advocating for a creation of what I consider to be a kinetic city, one that continuously seeks to reinvent itself. And then the second problem that we are facing is the one of the resource envelope, that the resource envelope is progressively diminishing against the challenges that cities are facing, the velocity of urbanization, and also the attendant challenges that come as a result of the velocity of urbanization makes it difficult for you to make some of these choices. And in fact, the competing needs are of such a nature that you are requested to resolve the immediate problems. So those are about restoring the dignity of our people, provision of water, sanitation, and electricity. And it makes it difficult for you to resolve a bigger question that in your consideration and your computation will constitute key challenges going into the future. The third problem that we are facing is also the rise of the social movements. They're becoming more emboldened. Some of them are belligerent. Their voices are increasing. So it's important that you are able to accommodate them in the resolution of these social problems. So I thought I must just frame some of the challenges that are facing us in general, I think, in the developing world, and in particular in our own situation. So we decided that the best way of making sure that these ideas, having been discovered, are going to be realized over a passage of time was to make sure that you canvass a critical body of opinion to be fully behind you. So the first requirement is that there must be a leader who's prepared to champion this new era, this new dispensation. And it is for that reason that institutionally in our city, the issues around the green economy, low carbon growth are located in the office of the executive mayor, because they must have a face, they must have a political champion, and you must be able to make sure that you canvass across a wide spectrum of interest, so that there is less resistance to initiating some of these problems. The other issue, just as in concluding the framing, is the problem of carbon finance is increasingly becoming less accessible to cities, and the absence of a global financing framework with regards to issues around carbon finance. It makes it very difficult, but also where it's available, it's a function of convergence from the sovereign. So national governments must also converge and must be of the opinion that that which you seek to resolve is in the interest of the country. And sometimes there's a divergence of views. We might be at variance with the sovereign. So it undermines our ability to galvanize resources to resolve the social problem. So that's the nature of the beast that is facing us at the local government level, at the city-state level. So it requires considerable attention. So the point I'm making is that there are limitations with regards to the financial framework, there are limitations with regards to the legal and the institutional framework. What have we done? I'm just going to share with you very briefly in less than 3 minutes some of the projects that we have introduced as part of what we call Vision 2055. So Vision 2055 in our city, it's a comprehensive narrative of the kind of future that we want to construct, and it's a product of a broad discussion with a wide spectrum of social groups, some at polar opposites of the ideological spectrum, but all of them are at one, that these are problems that needs to be resolved today, and these are problems that will constitute key challenges in the future. And that Vision 2055, it's anchored on the principles of resilience and sustainability and livability, which is the key discussion. What have we done? The first thing is we introduce projects that seeks to do the following because of the challenges I've shared with you. The immediacy of the benefits of these projects must be such that everyone is able to appreciate, so that they are fully behind you. So they've got 3 elements. One is that they introduce new revenue streams. I had made the point that the resource envelope is under serious strain, and then there are competing needs that requires attention. So you can't throw your money at some of these challenges because the immediacy of their benefits is not appreciated. So there are new revenue streams. So they generate new revenue streams for you. And then the second one is that they create employment. So it might be reskilling and making sure that people become new participants in the mainstream economy. Remember that our historic mission in our country is to make sure that we create a prosperous society. So it's important that we create decent and meaningful job opportunities. And the last key feature or characteristics of this project is that they don't draw from the existing fiscus. So we go out, there's appetite to some degree from private sector, and some of them are off balance sheets. What have we done? The first one is the multiple waste processing and treatment facility. We are running out of airspace. The city is expanding. Our waste collection trucks have to travel longer distances they increase the carbon footprint. So we thought that by introducing this the multiple treatment and processing facility, you'll be able to achieve a number of things. One, you reduce the traveling distance, and invariably you are reducing the costs. Two is that you are elongating the lifespan of our landfill facilities. And three is that you are able to recycle some of these waste, and then they can be placed to better use going forward. And in fact, we launched one about a week ago. It's a $10 million US dollar facility that we have launched. And we have been able to create through that 300 job opportunities. So it's moving from ideation, getting to a point where fruition, and people can relate that it begins to resolve their immediate problems. The second one is what we call security of revenue. This is the rollout of smart meters to all end users of electricity. Everyone who's a consumer of electricity must be on a prepaid smart electricity platform. It allows us, one, to be able to get money ahead of people consuming, because part of our problem is the issues around the collection of debt in our cities. So people are not paying for services. So upfront of consumption, you are able to pay. It improves our liquidity position. So that's a financial benefit. But then it's got a benefit with regards to managing the demand side of electricity. We've got a serious shortage of supply of energy in our country. And one of the things we are required to do is to scale down on consumption, because supply can't meet demand. So at the press of a button, we are able to meet the energy reduction requirements as determined by the power utility in our country. So it's an opportunity to address the income side, which improves the liquidity, but also it addresses the issues of the demand side. And then the other one is using our wastewater treatment plant sludge. We are able to convert this into energy. So waste hitherto has been a nuisance, has been a cost to the municipality, now is increasingly becoming an asset. There's multitudes of people who want access to our waste to do all sorts of things. So suddenly it's becoming an asset, and we are able to improve and diversify the revenue base of the city going forward. And then the other one is a solar energy farm, so that we are able to harvest, we are able to nurture the amount of sun days that we have in our city, so that we are able to make sure that we optimize the energy mix, and there's less reliance on coal-powered power stations, and then we're able to provide new forms of energy. And then the last one is we've got 2 coal-powered power stations in our city. Collectively, they've got the license to generate 900 megawatts of electricity. So we are refurbishing them so that we get new technologies, new investment, so that we use cleaner coal, and we are able to ensure that in those sites, we give an opportunity also to have solar energy, solar parks, so that we are able to optimize the energy mix, and there's less reliance on coal-powered power station or coal energy, and we are able to realize green growth. So the point I'm making is that in the developing world, you need to make sure that you mitigate and negotiate a multitude of interests, and make sure that in the course of introducing these low carbon initiatives, you are able to resolve the immediate challenges, the financing requirements, unemployment, reskilling, and generating new revenue streams. I'll leave it there. Thank you very much.
Thank you very much, Executive Mayor Ramokgopa. I think that was a good start for this session. Give us some view, not only about what can be done to translate ideas into reality, but really also what are the challenges on the way, and where we need also to continue to develop further mechanisms to support. I mean, we heard the issue about financing, the issue about having a good far-reaching portfolio of projects, so you can actually create synergy. So I think that was an excellent start. Now I would like to invite our guest, Pei Xiao, Vice Chairman of the Shanghai Municipal Commission of City Development and Management from Shanghai, to share his views on how to translate ideas to reality in a context which I have to say is most impressive and probably also most challenging. Thank you very much.
女士们、先生们，上午好！很高兴参加第4届巴塞尔全球基础设施金融峰会。作为上海城乡建设和管理工作的主管部门，下面我介绍一下上海市政府在建设宜居上海的工作中，在基础设施建设、城市节能管理和建筑节能服务产业培育方面的投入和努力，以及目前取得的进展。今天我的介绍主要分4个方面。第一部分，首先介绍上海基础设施建设与建筑用能概况。第二部分是上海市政府在建筑节能领域制定政策法规工作以及目前的进展。第三部分介绍上海市政府对城市建筑节能管理系统建设项目的投入与产出。第4部分介绍政府对建筑节能产业的引导与扶持，以及目前工作的状况。首先，我介绍一下上海基础设施建设与建筑用能的状况，主要介绍上海城市与基础设施建设情况、城市建设规模和能耗情况、建筑能耗的发展趋势、增长因素以及控制目标。上海位于太平洋的西岸，长江三角洲前沿，面积6340平方公里，人口2400万。在改革开放初期，上海面临着较为严重的交通拥挤、住房紧张、环境污染3大矛盾。1992年开始，上海成立了城建开发投资总公司，将政府直接投资的项目交予城投公司行使投资管理职能。上海借鉴国际上较为成熟的投融资方式，结合上海的实际情况，从成立政府性投资公司，实施举债建设，积极运用盘活存量、股份制上市、特许经营、高速公路社会招商等多元的融资方式，并积极开展土地批租，大大拓宽了城市建设的资金来源，有力推动和保障了上海大规模、高速度的城市建设和发展。到2011年，上海的港口集装箱吞吐量已经达到2907万标箱，港口的吞吐量达到6.53亿吨。上海航空枢纽加快发展，已建成5条机场跑道，机场进出港旅客7000多万人次，已建成了沪宁城际、沪杭科技客运专线，城市轨道交通里程运营里程已经达到450公里。应该说这些年取得了非常好的成绩，但是同时也经历了一些矛盾，其中资源环境的约束日益突出，环境保护与节能减排任务十分艰巨，建筑节能任务繁重。2014年是上海创新驱动发展、经济转型升级的关键1年。随着绿色建筑和建筑节能理念在我国不断的普及与推广，上海市政府积极响应国家号召，结合形势发展和市场需要，在绿色建筑的推进、公共建筑节能改造、再生能源建筑一体化应用以及推广市区能耗监测系统等方面做了大量的工作。下面以建筑节能为重点，介绍上海市城乡建设和管理主管部门在建设宜居上海的工作中有关政策、节能管理 与节能服务产业扶持的相关情况。到目前，按目前最新统计的数量上海市建筑面积已经突破了10亿平方米，并且依然保持着比较快的发展速度。常住人口已经超过了2400万，预计到2030年，全市能耗将翻1倍，达到5000万吨标煤。上海城市建筑能耗的增长是伴随着建筑规模的急速增长的刚性需求，主要有4方面的原因。第一方面是民生的需求，是城市居民对生活环境和生活品质不断提高所推动的。第二是城市规模不断扩大。第三是上海城市经济的转型发展，就现代服务业占这个 GPT 的比重越来越大。第四是气候环境的变化，近年来极端气候频发，也加剧了用能的增长。面对着不断增长的建筑能耗，根据国家和上海建筑节能12.5规划，上海市政府发布了上海市建筑节能和应对气候变化重点工作安排，将全市建筑的总量和增量的控制目标分解到各个区县，同时将建筑节能工作的重点从基础措施控制调整为用能总量控制。12.5期间，上海市政府设定了建筑能耗增量指标，近5年间，上海地区民用建筑能耗增量控制在800万吨标煤之内。第二部分介绍上海市政府在建筑节能领域制定政策法规的工作及目前进展情况，主要有3方面的情况。政府制定的建筑节能法规、行业用能管理标准及其工作成果，2013年建筑节能推进政策及工作成绩，以及上海建筑能耗监管政策体系。上海市政府在推进全市建筑节能的工作过程中，制定了节能的地方法规《上海市建筑节能条例》，同时也出台了具有实际意义和较强操作性的建筑节能标准与指南，为建筑节能工作提供了法律和技术的依据。2013年，上海市政府在绿色建筑与可再生能源应用、建筑节能改造及建筑用能监管系统建设等方面，相应发布了相关的管理政策和激励措施，如出台了上海市建筑节能项目专项扶持办法等等。近年来，上海宾馆、饭店建筑、商业建筑、政府办公建筑及综合建筑等业态的建筑合理运用指南相继制定并发布实施，供用能单位、管理部门与节能服务机构在日常用能与节能约束方面及时开展对标管理与管理预警。2013年，在上海市政府建筑节能相关政策的推动下，取得了相应的工作成果。绿色建筑方面，一是拟定了上海市绿色建筑发展3年行动计划；二是指导虹桥商务区、南桥新城开展低碳实践区建设；三是抓住保障房住宅绿色建筑的实施。在建筑节能改造方面，13年政府发布了上海市组织申报上海市公共建筑节能改造重点城市示范项目的通知， 上海市政府对公共建筑节能改造的示范提供了较大的幅度的政策优惠，同时中央政府也按要求给予了一定的资金的补贴。2013年，上海市已落实400万平方米的既有公共建筑能耗降低20%的改造任务。通过示范项目的试点探索，建立一套符合上海特点、具有可复制性的、可推广性的公共建筑节能改造的长效机制。可再生能源应用方面，以上海市可再生能源建筑应用专项规划为指导，全面推进可再生能源建筑规模化应用。2013年已完成可再生能源建筑应用面积450余万平方米，设计地缘热泵、太阳能光伏发电、太阳能热水等示范项目。为完成上海建筑用能总量控制的目标，上海市构建了建筑能耗监管的政策体系与管理网络，即一是以建筑物实际用能为基础，开展建筑用能分项计量与实时监控；二是以建筑分项计量为核心，开展建筑能耗统计与能源审计；三、开展建筑能耗公示，并在建筑实际用能数据基础上制定合理的能耗定额；四、制定以能耗定额为依据的超定额加价制度，通过价格机制推动建筑节能服务产业的发展。第三部分围绕建设智慧城市的目标，介绍上海市建筑用能管理体系的建设及运行情况。2012年，上海市人民政府发布了关于加快推进本市国家机关办公建筑和大型公共建筑能耗监测系统实施意见的通知，提出了3个层级两层平台的框架，同时明确了各级层级的功能定位。一个是市级总平台，17个区县的分平台和一个市级机关公共机构的分平台，分别面向3个层级的管理部门和相应的建筑能耗数据使用范围。上海市国家机关办公建筑和大型公共建筑能耗监测信息平台的建设和运行已经持续了7年，积累了大量的技术性数据，如建筑功能、建筑面积、位置信息、能耗数据等。2013年，市级总平台已经实现上海全市1500余栋大型公共建筑能耗统计信息的全覆盖。第4部分介绍政府对建筑节能产业的引导与支持。一方面是政府政策推进、激励与促进建筑节能改造；另一方面是多方协调，打造节能服务产业的伙伴关系。前面提到，政府在建筑节能领域开展的政策制定与制度建设，保障了建筑节能工作的开展的长效机制。根据上海市政府在建筑节能管理与政策制定方面的实际做法和经验，建筑能耗实时监测、对标管理、节能管理政策与改造资金扶持等建筑节能激励政策的共同作用，将从政策法规要求和经济效益回报2方面激发建筑业主的节能意识。同时，建筑节能需要专业的技术、管理和经验，将同时促进建筑节能服务商的技术进步，推动相关产业的发展，同时实现建筑能耗下降的目标。通过 政府引导与资金投入的撬动，同时引导建筑节能领域的多方协作，实现产业培育发展与升级。比如，通过提高合同能源管理方式的节能改造项目补助资金的金额，引导建筑业主与专业节能团队的协作，获得更好的节能效果。此外，政府的资金撬动和政策担保可以提升金融机构或投资商的信心，构成投资者、建筑业主、节能服务商、政府的多方协作。目前，上海实现了绿色信贷，即推出合同能源管理未来收益权抵押，通过银企对接，有10多家银行金融机构共同参与，为合同能源管理项目提供总额达130亿元的绿色融资。下面以一个具体节能服务的案例来说明政府对建筑节能的引导和对整个产业发展的培育作用。这个案例是上海最大的国宾馆西郊宾馆的节能改造项目。该项目是5星级的花园式国宾馆，占地面积1160亩，建筑面积10.5万平方米，主要用能系统包括空调、生活用热与照明系统。在整个项目中，政府制定的节能降耗控制目标激发了业主节能降耗的需求，但是宾馆自身并不具备开展节能改造的技术水平，因此需要委托专业的建筑节能技术服务企业，根据项目的现状，节能服务企业开展了前期的调查与方案策划，并采用合同能源管理模式，对主要设备如制冷机、循环热泵和热水设备进行了更新与改造。改造后，综合节能率超过20%。在此节能率的前提下，用人业主满足了政府节能改造补贴的条件，节能服务公司采取了合同能源管理模式，两者同时可以获得政府可观的资金补贴。在整个过程中，政府控制了能耗总量，用人单位降低了能耗费用，同时采用合同能源管理模式，也降低了工程的项目风险。对于节能服务公司而言，政府补贴资金的资助降低了企业的资金压力，而项目未来预期的节能量又可以在政府担保下开展银企对接，获得绿色担保。通过实际案例可以看到，政策的制定、政府资金的扶持、政府金融服务的担保等方面的引导和帮助，可以将政府节能降耗目标完成，企业降耗需求与用人实际需求的调和，节能服务产业的培育3方面的这个需求紧密结合，形成了新的节能服务产业链，最终实现建筑能耗的下降。上海市政府通过在建筑节能的政策的投入、管理基础设施的建设投入，以及产业培育的引导与资金的撬动，将建设宜居上海的工作理念落实到实处，夯实了建筑节能工作的基础，同时实施转变与调整工作思路，创新推进模式取得了明显的成效。我的发言结束，谢谢各位。
Thank you very much, Mr. Pei Xiao, Vice Chairman of the Shanghai Municipal Commission of City Development and Management. I think this was an excellent overview of the big challenges which we can see in the megacities quickly developing, where essentially we need to find a balance between the new buildings, so they fulfill the right standards, because clearly what was pointed out is the importance of the impact of buildings on the energy consumption, and then also how to create the right incentive, but also the right industry to actually have an industry to do the renovation for energy. So I think that was an excellent presentation showing really what frameworks need to be put in place to actually move these questions forward. Now we're coming to the last speaker of this panel, Michael Kuhndt, Director of the Collaborating Center on Sustainable Consumption and Production in Wuppertal, showing us how to approach it from a sustainable consumption point of view. Thank you very much.
Thank you and good morning. Maybe just a little bit about us before I go into the presentation. The Center on Sustainable Consumption and Production was founded by the United Nations Environment Programme actually to try to link consumption issues, the way we consume foods, mobility patterns, houses, and the needs we have for housing to production patterns, and with this also to infrastructure. So, for example, we have helped the Chinese government to create a sustainable consumption action plan. We are supporting in the moment the Brazilian and Mexican government as well to do similar. And it's always a perspective. We are trying to look from the perspective of the consumer, the citizens, and then we look back, how can we enable me or you to live a more sustainable life? And what is actually good living looking like? We also ask. And what is a good infrastructure actually to provide this good living? And this is also a notion which we try to follow in the center. Just my mental map to present it to you, where I'm coming from. So I look with the center very much on sustainable lifestyle. So I asked myself, good life, 2030, 2020, 2050, how will it look like? What kind of infrastructure? Where are we? And which place? Do we have the sea and ocean in front of us? Do we have a good public infrastructure, or how will it look like? And of course, knowing this, we also have to look into behavior patterns. So how do we decide, for example, on public procurement, what are the criteria we are setting? We are helping in the moment the Bhutanese government, and you might know that the Bhutanese government is not only looking on GDP, but they also look on gross national happiness. So they're trying to see how happy can people be in their circumstances, and we are trying to set criteria for public procurements helping on happiness. That's also a very different mental map. So, and again, procurement, it means largely investing into infrastructure, also in Bhutan. And if you look on well-being as an indicator, for example, how you deliver a certain infrastructure, that's maybe again a different mental map you might have in your mind. Then we're also looking on products and services and infrastructure. If we imagine a sustainable city, a sustainable lifestyle, what is again the products, the services we have daily in our hands, which are followed by public services and which are done by private services as well. And then we go also into innovation and business modeling, trying to see what actually would make a good business model in order to support a sustainable life. So that's my mental map, and I like to go through with some of this as an inspiration for today's discussion. And first of all, maybe again a status quo in terms of where are we? We have some countries, they have a lifestyle. If we would upscale it to the global scale, then we would need 2, 3, 4, 5 planets. And that's a picture when you come from the resource consumption perspective. So me, I live on a 4 planet, my daily lifestyle. I try to be efficient already, but somehow, in terms of infrastructure, in terms of patterns, in terms of my peers, I'm comparing myself. I want maybe to have a good car. I want to have a super good house. And that makes me a consumer, which is a 4 living or 4 planet consumer. Of course, you can ask now this question about equity, about sharing, and so on. And of course, I still want to have a good life. I still don't want to give up anything. But still, can we find smart ways, finding efficient solution? And you saw in the previous presentation a lot of kind of this rationale about efficiency, looking into energy grids, looking into mobility system. But of course, we also have the situation we have in some countries, the half-planet consumer. So they don't have the access to consume even certain products and services. How do we upscale this? And how do we create a balance between those who consume a lot and those who have no way to consume at the moment? So this is also something which we are trying to look at. And of course, we know that lifestyles are totally different. If you just look on food patterns globally, you see easily it's very, very different. And even within a country, you find those consumption patterns. So you find in China the middle-income consumer who might be similar to somebody from the Western world. You find the high-income consumer, and you find also the low-income consumer. So how do you balance, even without a country, those issues? And of course, you can express it also in terms of, again, resources. And me as a German, I consume an average, me alone, 70 tons per year. If I have a family with a wife and 2 children, you have to multiply the whole equation with 4 already, because it's an average figure. In Bhutan, you have different figures, and in Mexico and in China, again, it's different. But in China, of course, with the growing population and with the growing demand, the resource amount is skyrocketing at the moment. So it has been already 10 years ago with 3.5 tons per capita. We are now with tons, and we did a scenario in China looking with different ministries on 2030, and we found that the average Chinese might consume then already 60 tons per capita and year. Multiplied with a number, you see there are certain challenges which we need to face and which we need to bring back to infrastructure, product, services, business models, investments, and investment criteria. To make it a bit more tangible, I would like to introduce here Bernd. Bernd is also German. He has actually a family, 2 children, a wife, and he has certain consumption pattern. He has a house, he has a car, actually has 2 cars. His wife has a car and himself has a car. He has certain mobility patterns. He has, of course, the need to eat good and waste also a lot of food. He has certain living lifestyle patterns. So, and the question, and actually Bernd is not a fictitious person, he's a real person. We work with Bernd and his family trying to understand what makes him, which desires maybe he has to be different, and what makes him actually looking into being smart in terms of his energy consumption, being smart in terms of using sometimes maybe public transport, or even defining his lifestyles, like what is my work-life leisure relation, and how do I spend money as well. We take this as a case now and say, okay, he has a 4-planet lifestyle, and as I said, that's around the 70-ton equation, or for Bernd actually it's around 56 tons, because he took certain measures already. But also as an inspiration, a 1-planet lifestyle, just to see the efficiency perspective in it, and how efficient we have to get with infrastructure and all other things, because it will be very hard to change Bernd and his patterns. So maybe we need to change in some way his surrounding as well. A 1-planet lifestyle would be around 7 to 10 tons. So that's kind of the equation which we need to achieve through product, services, infrastructure to support maybe Bernd's lifestyle on this. And then you can go into different scenarios. You can look into all this, where actually is a potential. Do you want to have some savings on food or others, like housing, mobility, and what are good solutions there? Do we have smart solutions already? Do they are enough so far to actually serve the global planet with all the consumer and the growing consumer classes as well? And then we come back to the infrastructure. Of course, you cannot live a sustainable lifestyle in an unsustainable infrastructure. If you don't have public transport and affordable transport, safe public transport, you will not go for it. You will invest into an SUV, which gives you the surrounding, the safety net feeling you might need. So again, how do we interrelate Bernd or any other consumer to the infrastructure as well? And there we are. We need to talk about city development, and all those different lifestyle patterns Bernd has. And of course, we need to talk about investments. Where are smart investments taken place, and how far do we get with those investments to offer actually a sustainable society, to offer sustainable citizenship? And do we manage? Do we get so far so good? We are running a number of vision workshops on this as well, because nobody knows yet how a sustainable society could look like. Imagine a weekend spent more sustainable, go through with your family, try to discuss it, and you will see the limitations we are still in. It's hard to imagine a life spent most sustainable because there are so much different, on the other side, marketing techniques, advertisements, theories out there, which are sometimes linked to a very unsustainable life. And so we are trying to see this with business and other organizations. How do we get from a 4 planet to 1 planet scenario? Saying this as an inspirational picture only. How do we look on different lifestyle patterns? And how can we create some visions for different actions, actually? How can we foster those different ideas? If you look on the visions, what comes up now quite often is the notion of the sharing economy. And the sharing economy is an interesting element because it says basically, why do we have to own all the products and services we are creating? Bernd's lifestyle, I said it's around 60 or 70 tons. Actually, from the 70 tons, 90% of this is not used every day. So he's using the 70 tons only 10% every day, and the rest of the 90% sometimes is just using once a year. And the same is true for other infrastructure. So probably there's a way to share public services with private services, to interlink them, and to look into, like some countries are already looking, into the notion of the sharing economy, of a sharing city. How can you build actually investments around it? And let's go through some example. Let's look on transportation, from bike lines to lanes to car sharing. And of course, certain investments are needed to enable this. You see that some countries and private companies also are interested in it. You see this potentially also on food. How do we get all this food consumed and produced in the future? Do we have some other alternatives? Do we can also give back a certain value to food, which we lost maybe because you're so disconnected about the products you're buying. You even don't know where the cow comes from and how it looks like. And so maybe there's a notion also about urban gardening, which we could look at. Or maybe it's also about improving the durability of products and services and enabling people again to look into those things they're having in terms of, sharing or repairing even products. That sounds small, and that sounds bottom up, and it's true. It's bottom up. It's very bottom up, but watch out. Some may have already said it's scary what's happened bottom up, and if we don't watch this out, we might actually lose out because it's in some way sometimes actually kind of scaring even our public services, as it was even expressed before. Or you can look into co-housing, co-working, and you will find already examples around the planet in different countries where this is enabled. Or you can look into fab labs. You make actually consumer-producer. You enable them to use their skill, their innovation skill, to find social and local solution and to implement them as well on the local scale. So you're trying to decentralize certain ideas, and you have heard this already about, for example, smart energy grids. There's a huge potential to see this in a much more decentralized way and to see even each household as a certain way also of producing energy. And of course, it's also about ICT infrastructure. All the sharing economy certainly is bound as well to share information, to be at the source available to access a car. You don't need necessarily to own a car, but you want to have the access to a car. And if you look on the young generation, and that's again then scary for some car companies at the moment, they don't talk necessarily about having the status quo of a car. They talk about the status quo of having a mobile phone accessing a car. And again, that's a different pattern of consumption which might influence infrastructure as well. So all this is certainly still experimental, bottom up, but again, there could be some rationale about scaling this up as well. And we did a study with the World Economic Forum at the moment, asking those who offer those services and business models, what do you need to upscale this? And number one, because it's certainly still new, is like, we still need to make marketing around the topic. We need to let people know, well, sharing as one idea is a good thing. But also we need actually new partnerships. And what those entrepreneurs say there is actually partnerships with public organization. So intervening and interlinking actually public-private services, enabling a sharing economy. So all this actually leads me to the last slide, which I wanted to present. So maybe we need to look from sustainable city perspective, from the traditional notion of like treating problems at the source, like usually end of pipe, to more and more what you see actually looking on the whole solution in terms of the infrastructure and creating a different type of infrastructure, but maybe not forgetting about the whole system and that people make the infrastructure sustainable or unsustainable. It's not about just investing into the technology, it's much about the social innovation of people understanding how to use it and maybe having a certain value also about the infrastructure in a different manner. And there again, I think the sharing economy brings certain ideas together, the technology and actually the social innovation which might be needed and which might be a good case. So overall, I think there's a good scope to look from the sphere of influence, which is the infrastructure, but also to actually, through a vision, maybe go up even to the idea of looking into a sustainable society and then back asking what is a sustainable infrastructure for a sustainable society and not the other way around. Thank you very much.
Thank you very much, Michael Kuhndt. Reminding us that at the end, we are not only a push, we don't need only a push approach, meaning cities or governments building new infrastructure doing, but we need to talk about the pull, saying what do consumers want and how can we help them to change, which will be then a subtle interplay between creating the right infrastructure so they can get what they want. Now, I mean, you heard a lot of great examples on how to translate vision into reality, to create livable cities, which at the same time are sustainable. But I know there's quite some people here who have their own experiences. So before ending this session, I actually would like to invite those who would like to share some of their experiences in translating vision to reality. Because I think it's also about sharing experiences. So is there anyone with, yes, please, back there. If you could quickly present yourself and then share your experience.
I'm Ton Hauser from the Netherlands. If I listen to all three the stories, what I see from above in bird's view is actually a competition between marketing of the old world and the new economy. The two are fighting each other. The old economy wants to produce as much as possible to survive, and the new economy wants to consume as less as possible. If we continue to work in this way, I don't think we will make the way forward. Why aren't we trying to combine the two? If you're trying to reduce consumption, try to find the solution also for industry that wants to survive by now only producing more. And if the two can come together and the marketing force of both can be joined, I think then we can make the large step forward, which we all want.
Thank you very much. So what you pointed out is that fundamentally the underlying growth model, at least for economy, is still not really synced to what we want to do. Anyone here on the panel wants to react on that? You have a microphone in front of you. Michael?
Yeah. Yeah. I don't know if it's, and I totally agree what you said, it's not either or, it's a transition from maybe one to the other. And certainly, I think what I try to express, at least with the sharing economy, it's kind of partly driven by business as well. It's new type of entrepreneurs, having new type of business models. But it's an interesting pathway to a transition. And certainly the sharing economy is just one. You can take other notions as well. So I think, yes, the integration is important. And of course, if you look on consumption, it's not said that we consume less necessarily, but we consume much more efficient. That was the statement I wanted to give. So looking into, how do we make do with the resources we just have and still, of course, create value? And again, I like the example very much of the Bhutanese government saying, because that's kind of where investments join a certain understanding of a government, indicating indicators of development, saying, yes, happiness needs to be linked, interlinked, and with this welfare, well-being, with our own procurement practices. So how do we set indicators? What type of criteria do we set in order to enable more well-being in our society? And again, of course, business is interlinked with it. And yeah, I totally agree. It's a transition and not either or.
Thank you very much. I think this is really important. I had one experience to be shared here, and then we're coming here. Please.
Yes, my name is Hassan Harajli. I'm from the United Nations Development Program and from Beirut. Thank you very much for the presentations. I have just a slight comment question. Maybe this is not the best place to say it, but throughout these 2 days, I mean, this conference is bridging opportunities with investors. But the big problem that I'm seeing also in Shanghai and in South Africa, it's repeated, is the issue of population and population growth. And I know this is a big problem. It's like we're trying to always meet the demand of a growing population, and we take it for granted that there's nothing we can do with unsustainable growth of the population. So my question to the guest is, I know China has done this before, and now it maybe relaxed its rules. But for all nations, I know it has to target religious norms, cultural norms, the social aspect of things. But is there anything that can be done, or shouldn't something be done, just to try to rein in this issue of population growth and not take it as granted? Because it will always overwhelm whatever you try to improve and to do. Thank you.
Thank you. Someone would like to react here? You have a microphone here.
Thank you very much. Well, I guess in the South African situation, it's not organic growth. It's largely the inward migration into urban centers. So it doesn't talk to the overall population growth in the country. You find that people are either displaced from the hinterland, or there are attractive forces in the urban center. That people come to the center looking for better opportunities, looking to be integrated into the mainstream economy. And the point I was making was that the velocity of that urbanization is not met by the resource envelope, that we are unable to diversify the revenue base, and as a result, we are unable to meet the expectations of the new residents in the urban centers. And that's why the key anchor of the presentation was that we should look for alternative revenue sources to make sure that we resolve what is potentially a social problem going forward. When people don't have access to basic services like water, electricity, and sanitation, given the fact that they are concentrated in one geographic space, it might explode into a social problem and a political problem over a passage of time. So that's what we need to resolve in the immediate. Then there's a second issue that as a result of growth that is shared, job creating growth, people aspire to be part of the middle class. And invariably, consumption also increases. It's putting a strain on some of our landfill sites. The airspace gets to be diminished much more quicker. So we must look at the opportunities of how we're able to mitigate against those new consumption patterns and the unintended consequences of growth, in particular, the increase in consumption. So really, it's organic growth, but largely it's more about the urbanization.
Thank you. Some more reactions to this question? If not, I will move on. We have one last.
Yes.
Yes? I actually have, can I come here and then I come to you?
Sì, Cynthia Jamie from Argentina, living here in Switzerland in Basel since 18 years. Thank you very much for the presentation. Your presentation also, Michael Kuhndt, was amazing, very clear for consumption. I would like also to listen a bit more about the production issues, or how to foster the production. in Argentina and in Latin America, and it's now starting to grow the idea of fostering the B enterprises, the B companies, and with two pillars, environmental and social. This has to be, and how is the fostering that? And to Mr. Xiao, also I have something to address. As they pointed that the growth of the cities are like granted, and I guess it's the result of the political centralized, the whole political central politics that makes the population of the rural area. I saw you have a development at a ministry with housing and rural. Yes, and rural issues, but how far are you concerned this, instead of growing and giving solutions from big cities, how far are you in the development of a real governmental policy to make stronger regionalisms? That's both questions.
Okay.
Hello.
We let two answers and then I come to you. Mr. Pei Shao, would you like to react? Microphone, please.
应该说，中国政府对这个节能的重视程度是非常高的。他把这个国家层面专门制定了节能的政策。那么，中国的各个地方政府可以根据中央政府制定的要求，再根据各自的情况制定自己这个的政策。应该说，上海是中国最发达的一个城市，所以上海的我们制定政策的标准是高于中央政府给我们的提这个政策的标准的。在推进过程中呢，这个特别新的产业，比如说节能啊，它需要资金的投入。按照这个在前期呢，往往我们会采取一些政府的资金的扶持啊，我刚才也已经介绍了，包括我们那个税收的优惠，等等吧，还包括这个我们的信贷政策、我们的担保政策等等，来扶持这个新型的产业的发展。一旦等它达到完全市场化的程度以后，这个政府再进行放手，让它充分的进行市场竞争。一般目前这个我们国内的很多行业都是这么在做。
Thank you very much. We might move on because I think the production discussion is a huge one, which we could make a session on its own. I leave it with the organizers that we might have that one for next time, I'm sorry, because we have one last experience here from the public, and then we will move to the next session. So please, madam.
Yeah, good morning, and congratulations for the excellent presentations. I'm a mayor from India. So yes, the population is the biggest problem, and sometimes as a mayor I feel that I can never meet the demand-supply gap. And so I endorse what she said. We need to have social infrastructure. That is, we need to improve health and education of the people because they are illiterate, so they produce more children. There is always a fear that few of their children will die. So health and education, I think that is the most important we need in India. Thank you.
Thank you very much. I think that was a very appropriate remark. I would like to thank the panelists for this first part, which has given us some interesting insights and outlooks to how to translate vision in reality, but also shown us the challenges which mayors are confronted, cities are confronted, and also the real final challenge that we should not forget. It is also about the consumers and how they behave and what they do. So thank you very much for your participation, and we will now move on. Thanks. Thank you. Thank you very much. Thank you, sir. Now we will move on to the second part of this panel, where we actually want to look more at the financial side. We want to look at the translation of sustainable infrastructure in an asset class to actually facilitate its financing. And I would like to invite Teresa Flynn, which is already with me, and also Ms. Xiaowen Li, Director, Division Chief of Statistic Department of the China Banking Regulation Commission of Beijing. And I forgot to say, Teresa Flynn is Director, Renewable Power from BlackRock, Dublin. So we will do a similar approach. So I will let Teresa first have a short glass of water, and then I will invite her to do her presentation, and then we'll hear from you. Thank you very much. All yours.
Good morning, everyone. My name is Teresa Flynn. I'm a member of the BlackRock Infrastructure Investment Group, and I'm really pleased to be here today to talk to you about what BlackRock is doing in the infrastructure space, and in particular bring the perspective of the investor to the debate.
You can go there and just do your speech.
So just a few words about BlackRock. Hopefully some of you know who we are. BlackRock is the world's largest asset manager. So we manage capital, we manage money for our clients. We've over $4 trillion of assets under management, and our clients would span governments, public and private pension plans, sovereign wealth funds, all the way down to retail investors. Investors who are trying to save money for their retirement or trying to save money for their children's education. In addition to this, BlackRock also has a risk management platform called Aladdin, and a further $14 trillion of external asset manager platforms sit on this risk management platform. And it's a separate service in BlackRock, but it enables us to deliver a service to those clients to track risk across their portfolios. In terms of what we're doing in the infrastructure space, I guess the infrastructure business at BlackRock is relatively new. It's about a 3-year-old business. And I should have mentioned BlackRock as an institution is around for about 25 years. And our heritage is in fixed income. And as I mentioned on the prior slide, today what we offer in terms of investment products span the entire spectrum. A little over 3 years ago, probably about 4.5 years ago, BlackRock as an investment manager really started to think about what it should be doing in the infrastructure space, because our clients, we were listening to our clients who were saying yields are falling in fixed income. The equity markets can be volatile. I'm really hungry for investment in real assets. And we really need to put this into the perspective of our clients who, from their perspective, in some cases they've got increasing deficits in their pension plans. They have liabilities that are increasing over time. So as an investment manager, we need to offer them a suite of opportunities. And in relation to the real asset space, we really did respond to what they were looking for in terms of investment opportunity. So today, what we have in the infrastructure side of our business, we have an infrastructure fund-of-fund business. And actually, a major part of this business was acquired from Swiss Re in 2011. That business is about $800 million of AUM, and essentially it invests in infrastructure funds around the globe, including in some emerging markets. The part of the business that I'm in, Renewable Power Equity, was established in 2011 also, and it's a very specific and niche strategy. And the focus of this part of the business is investing in onshore wind and solar PV projects across Europe and North America. And when we were thinking about setting up the renewable power strategy at BlackRock, I think one of the key things we had to decide at the start was, let's keep the strategy very focused. Let's focus on the technologies that are most mature, because after all, we have to go ask people who are worried about pension deficits and increasing liabilities over time to invest in this asset class. So in the fullness of time, we certainly expect our renewable power strategy to expand to other types of renewables, including offshore wind, solar, and or rather tidal and wave technology. But for starters, we had to start with something that was very proven. Also, from a market context, we are focused on Europe and North America, but in the fullness of time, we certainly see our strategy expanding across the outside that geographic area. And I think the key message is you need to start with something simple. You need to prove the model. We need to demonstrate to institutional investors that this is an asset class that can deliver an attractive and safe return before we start expanding the strategy too broadly. Finally, the other part of our business, infrastructure debt, was really a response to what was happening in the project finance market, which I'm sure we're all very familiar with. after the financial crisis. In addition to a lot of the regulatory change that's been happening in the financial sector, the project finance bank started to retrench. Meanwhile, we had clients, particularly on the insurance side of the business, that was looking for long duration fixed income product. So as a result, the infrastructure debt team was brought together in response to that. So today we have just over 2 billion of investor commitments for infrastructure, which is very, very small, really, when you think about BlackRock as a $4 trillion business. But infrastructure is very much a core priority for our firm going forward. Larry Fink, our CEO, when he goes around the world and he's having conversations with various different government officials, he's hearing what they're saying, which is we've got major infrastructure deficits in the developing world, in addition to what's happening in the developed world. We need to fill the gap that's being created between the deficit between public finances and the infrastructure need. At the same time, the other flip side of the coin is our investors who are looking for investment in real assets. And I guess this slide really brings the theme together. When we think about the need in infrastructure, we're looking at a $1 trillion investment need annually. And I think, again, when you're trying to encourage institutional investors to invest into a sector, you need to convince them that the opportunity is real. And certainly when we look at infrastructure, the dollar requirement, the euro requirement, whatever you want to call it, is very significant. On the flip side, and I've mentioned some of this already, we need to be very cognizant of what our investors are looking for. And we need to position the opportunity in the context of language that is meaningful to them. And certainly, yes, we're having several conversations here at the conference around sustainability and what we need to do in order to provide the essential infrastructure to growing cities. It's important to shape that language in a way that makes sense to a pension plan or insurance company, because their responsibilities are, I need to guard my pension plan clients' capital, and I need to provide them with a return. So what are they looking for? They're certainly looking for secure income and long duration assets. And as a result, infrastructure is a perfect fit. Clearly, pension plans and insurance companies invest in liquid markets, and having liquid investments is very important. But at one level, returning capital after a short period of time just recreates a problem for them, because it's where do I now put it? So if we talk about a solid infrastructure investment opportunity, you're looking at investment opportunities that sometimes are around the 10-year mark, but if it's matched with the duration of the asset, often 20, 25 years. So if you're looking for someone to invest in something for 20, 25 years, you absolutely need to be able to answer questions in relation to the security of the income stream. I think certainly what we're seeing is that investors have a preference for cash yield as distinct from capital gains. Clearly, capital gains are important. But again, if we put ourselves in the mindset of our investors, from a practical point of view, they've got pensions to pay on an annual basis. So you absolutely need to be delivering cash yield, cash distributions on an annual basis in order that they can fulfill their own requirements. I think, capital gains, just to talk about that for a moment, when you're positioning an investment opportunity, again, it's all about the cash flow as distinct from here's the value that's going to be delivered to you in 10 or 20 years' time when the value of this investment opportunity appreciates. I mean, capital gain is certainly important, but it's not where you should be starting the conversation. You need to be starting the conversation in the context of this is the cash flow in year 1, year 2, year 3, and so on. I think it's important to remember that, again, for our clients, they're relatively risk averse. And that's because their basic obligation is to, as I mentioned already, protect the capital that is entrusted to them and deliver a return to the investors. Because if you think about your own pension plan, you want to make sure that money is put in a safe place. Inflation protection is very, very important. And to the extent you can position an infrastructure investment opportunity demonstrating that it has explicit inflation protection, that can be very powerful. So if I bring it back into the context of renewable power, we really do prefer the investment opportunities that have the revenue line linked to inflation. In some markets, some of the structures have upward-only inflation, which again is very attractive. And why is this important? Again, to our clients, their liabilities are increasing over time. Transparency, which goes without saying, is very important, and I think that's where infrastructure really excels. I mean, it takes a lot of education to change the mindset of an institutional investor, to move away from the equity markets and move away from fixed income to think about something that is represented by steel in the ground. But if you can break it down, and again, I'll take the example of renewable power, the majority of the capital cost is upfront, particularly, I guess I should have mentioned, we invest at the start of construction, we invest at the project level, or indeed we invest when an asset is up and running. But if you take a renewable power asset, at the start of construction, if you structure your project correctly, you know what it's going to take to build. Also, if you have a long-term contract for the sale of power, in certain cases, you'll often get contracts for 10, 15 years. You know what you're going to be getting paid for that asset in 10, 15 years' time. The OPEX, the operating costs for a renewable power asset, we don't have a resource cost. We're harnessing a free resource. So the margins that you'll have of revenue over OPEX are incredibly high, often as much as 80%. So when you're really positioning your investment opportunity and you're going, I know what it's going to cost, but I also know what it's going to generate in 10, 15 years' time, that's a really powerful message. Now, clearly, other types of infrastructure, if we look at toll roads, yes, you'll have issues to deal with, such as volume risk. If we look at gas plants, yes, you'll have issues to deal with, such as sourcing the input. But it's really important to kind of identify what the risks are and show what the mitigants are. But being as transparent as possible, having a very clear financial model, showing how the revenue profile is built up, it really is the only way to win the argument. I thought I'd share this slide because I thought it was interesting, and basically it's the result of a joint survey that was conducted by Infrastructure Journal and Bearing Point recently, back in September 2013. And this is really a kind of repetition of some of what I've been saying already. These two institutions did a survey of some major institutional investors around the world, and they said, when you think about infrastructure investing, what's most important to you? So, as I mentioned already, stable cash flow, really, really important. When we were out raising capital for our renewable power strategy, the amount of time that we spent talking about regulatory change and, unfortunately, what happened in Spain in relation to the solar tariff was just, it was phenomenal. Because, again, sitting across the table from people who actually have a huge responsibility in relation to where they deploy their capital, they were saying to us, look, I don't want to invest in solar because I read the paper and I see that, Spain has retroactively cut its solar tariffs. I don't want to take that risk. If you're asking me to put money away for 10 plus years, I want to ensure that the regulation is fairly stable. So stability of cash flow is very, very important. I think for us, how we win that argument around concerns around regulatory change is that we start with the fundamentals. And our strategy, particularly on the renewable power side, is to only invest, if we take the solar example, only invest in solar projects where the price for solar is relatively close to where the market is clearing. And this is going to the idea of sustainability. If we're investing in projects that have really super high tariffs, that is 2-3 times the price of where conventional power is clearing, something's going to happen at some point because governments won't necessarily be able to sustain that. So, if people are concerned about regulatory risk, it's a valid concern. We address those concerns by certainly talking about the stability of the regulatory and the political regime, but we really win the arguments by focusing on the fundamentals and focusing on, look, this solar plant, if we take some of the solar that we're doing in France, yes, the tariff was 300 euros per megawatt hour 5 years ago, but actually the solar projects that we're investing in today is at 80 euros per megawatt hour. So we almost turn the regulatory issue on its head by saying, look at what is happening in the economy globally, look at what's happening to the price of PV panels. This technology is maturing, it's able to compete with conventional power. There is no implied subsidy anymore. The economics speak for themselves. I suppose another thing that's really important, again, mentioned this already, is the defensive nature of infrastructure that's really, really interesting to institutional investors. And what I mean by that is the following. So, people invest in the stock markets, absolutely valid strategy. But if you put your money into an institutional, if you put money into an infrastructure project, I can take you to the site and you can kick the steel in the ground. It is real. It's a very tangible place to put your money. And I think when we show to investors, look, this is a valid bucket for your investment portfolio, because the key from their perspective, when we think about pension plans in insurance companies, they need to diversify their portfolio. So when you think about your fixed income, when you think about your equities bucket, infrastructure is a really nice bucket to have as well, particularly because I can take you to the project and you can see where your money has gone. Diversification, I've mentioned that already. Inflation linkage is right up there as well, as I've mentioned before. I think, and I see Daniel up there, this is certainly one of the conversations that we've been having. It's really important for us to think of infrastructure as an asset class. And again, I'm repeating some of what I've said already. I mean, when you're thinking about trying to attract capital for your project, you really need to think about it in the context of, I need to convince someone to reallocate out of another investment strategy. So, people look to BlackRock as the largest asset manager of the world, $4 trillion of assets under management, huge business, but that money is invested somewhere. So when we had to raise money for our renewable power strategy, we were talking to our clients, and the conversation was very much around the relative merits of infrastructure compared with the other investment opportunities that were open to them. This is certainly a very busy slide, and I suppose I prepared it before the conference thinking about how do I work the sustainability angle into the presentation and make it relevant. And I started off by looking at, yes, it's a $5 trillion plus annual investment need. If we look at, the areas that investment is required, we're looking at water, we're looking at sustainable infrastructure in terms of hospitals, et cetera, et cetera. If we look at the geographies that require investment, we're certainly seeing a significant amount in non-OECD countries. But I have to say my whole understanding of what we mean by sustainable infrastructure investing has significantly changed since being here these last couple of days. And I think this is key. I mean, it's not just about building the hospitals that's required. It's not just about building, infrastructure in developing economies and cities that really, really need it. It's actually doing business in a much more sustainable manner. And if we look at what's happening in other industries, and I'll take the food industry as an example, I mean, look at what the Unilevers of the world are doing, look at what the Nestles of the world are doing. They're reinvigorating their business models to be more sustainable so that they have a more cost-effective model and that they're producing something that better fits the customer needs. So I'll take the Nike example. I mean, Nike redesigned the runner to be lighter because essentially it was better for the customer, particularly if they're running long distances. But that actually drove cost out of their business model. So I think the message that I'm taking away from this conference is, infrastructure investing and the sustainability component of it. It's a more fundamental concept than just saving the planet or doing what we need to do to fulfill the social need. It's a way we have to kind of change our business models so that they can be around in 20, 30 years' time. For me, the kind of key is that, when you're trying to raise money, you need to really start with a strong economic argument. You need to really found your discussion around this is the return, this is the cash flow it's going to deliver to you as an investor. And then if you fold in the sustainability discussion in that context, I think it just makes it more powerful. Okay. Okay, I'm just conscious of time, so André, I'll speed up here. This is just an example of, it's actually taken from one of our investor decks as we were out raising money for our renewable power strategy, and really I'll just spend a few moments on this because I've really spoken about it already. The message I want to bring here is when you're thinking about attracting money for whatever it is you're trying to build, and in our context it was renewable power, we had to look at what were the issues our clients were facing. Bond yields were very low, they weren't getting the return there. They had volatility in their portfolios, so we really redefined the investment opportunity in a context that was meaningful to them. So down along the right-hand side of the page, highlighting the defensive characteristics of the portfolio, working right through to the benefits of, I guess I haven't mentioned this already, low correlation. So when we think about an infrastructure asset, irrespective of what's happening in the stock market, in particular if you take a wind or a solar plant, the wind is continuing to blow, the sun is continuing to shine, you're still generating cash. So it's really important to take what you have, but break it down and put it into the language that will be meaningful to investors. Quick point here that I want to make is clearly there's different ways to invest in infrastructure. Infrastructure debt, taking a senior secured position, is clearly the least risky, but clearly the returns are going to be lower. As you move up that risk profile, moving in from, people talk about core infrastructure, which is really represented by operating assets that have long-term contracts in place for the sale of the units or the power, moving right up to more opportunistic opportunities. And as you move up that spectrum, the risk clearly increases. It's so important that if you're talking about infrastructure that you don't move too far up that scale, because if you do, you're really losing the benefits of what infrastructure really present, and it's becoming more like a private equity investment. So, today institutional investors don't have huge appetite for development risk. Today institutional investors don't have huge appetite for merchant exposure. They want long-term fixed contracts in place. So, it's all about, what's the right market for the risk profile that you presently have. So to conclude, clearly on the face of it, the global infrastructure investment set is a multi-trillion-dollar need. If we're looking at developed markets that have aging infrastructure and they need to reinvest, if we're looking at emerging markets who need to, underpin their economic growth. Also, I suppose a key thing about infrastructure, increasingly it's becoming a major pillar to economic and industrial policy. It can create a lot of jobs in the local economy, so building these infrastructure projects can be very popular from a political and economic perspective. Certainly want to leave you with the message that what we're saying to our clients about why infrastructure is an attractive investment opportunity is really resonating. But there are challenges. When we think about the multi-trillion-dollar investment need, when we break it down into what's actually investable, the data set shrinks. So people talk about the big need, and people talk about all the capital that's out there. Attracting that capital isn't easy. And I think you really, again, need to kind of work back to some of the themes that I mentioned in the presentation, have the clear financial model, show how the cash flows are broken down, define the investment in the context of the language that makes sense to institutional investors and what it will do for their portfolio. On the policy and regulatory side, I guess one of the challenges we have with infrastructure is it's a long-term asset. 25 years plus are often what you will be looking at when you're assessing cash flow, but the policy is often short-term. So there's a bit of a mismatch there, and I'm not quite sure what the solution is. It's a conversation that we have all the time. But again, think about your own pension portfolio. I mean, if you're putting your money into something, you would, for 25 years, you'll want to make sure that the revenue profile is pretty stable. So I think governments really need to think about that, in addition to, thinking about how they meet the increasing deficit on the infrastructure side. So thank you for your attention, and I look forward to having any questions that you might have. Thank you very much.
Thank you, Teresa. I think this was an excellent presentation where we see that there is actually increasing appetite to go into infrastructures, but still it's not all solved. There's still some work to be done, and I think there's a real call to both sides, the investor side as also on the public policy side, public policy to define clearer models how private investors can enter in big infrastructure projects. And I wanted just to make a link back to our opening session, our capacity building session, which we had also with John McComber, where it's clear that the whole question of PPPs is still a very open range and needs to be further developed. And I think the second one which you raised is we have this kind of mismatch between legislatory periods and investment periods for infrastructure projects. And I think one of the projects we looked at suffered from this because there were some fundamental philosophical changes happening after a 4-year period. So now I'm very pleased to introduce Xiaowen Li, Director, Division Chief of Statistic Department, China Banking Regulatory Commission, who will share her views. There is a lot of things happening actually in China on responsible investment, and so we're very pleased to have you here to share with us your insights. Thank you very much.
So good morning, everyone. I'm Xiaowen Li from CBRC of China. So first, I'd like to thank the GIB for organizing this summit. This is a great platform for all of us to exchange and communicate. I also have the honor to be invited to attend this summit, which is a great occasion for me to share with you on how to give full play to the important role of the policy, regulation, and the financial institutions to promote sustainable development. As you know, a rational allocation of financial resources plays significant part in promoting the transformation and upgrading of real economy and moving towards the objective of sustainable development. It is also a way the banking sector must follow to fend off credit risks and speed up transforming development pattern. It is more important for China as a developing country, to fulfill a rational allocation of financial resources, particularly credit resources. China Banking Regulatory Commission has constantly attached great importance to this work. First of all, we have developed a green credit regulatory policy framework since 2007, issuing a number of rules and regulations to guide banks to extend credits on green to green and low carbon economy. Meanwhile, we have pioneered the statistic system for green credit, through which we can not only evaluate the gross amount of green lending, but also we can estimate the amount of CO2 emission reduction and energy conservation contributed by this credit. There are about 12 green projects in this statistical system. For example, it including energy and water, saving in industrial sector, renewable energy and clean energy, green building, green transportation, and so on. All of this, many of these are associated with sustainable infrastructure investment. In addition, we are improving the system to examine and evaluate the implementation of green credit. We are, with the effort, we are developing the key performance indicators to evaluate the implementations of green credit in an effort to link performance of fulfilling the green credit to the selected regulation measures, such as performance evaluation of banks' senior executives, institutions licensing, business development, and supervisory rating. CBRC will develop the scientific examination and evaluation system so that banking institutions would allocate credit resources to sustainable economies while preventing against the environment and social risk and enhancing their own environment performance. The banks will achieve a mutually beneficial results with these efforts, supporting real economy while managing credit risks. CBRC and the Ministry of Environment Protection of China launched the Environment Information Sharing System. The environment performance information of the clients will help banks to make credit decisions and safeguard assets quality. The banking institutions, with the collective actions of their stakeholders and through the innovations in green credit procedures, products, and services, have made significant contribution to energy conservation and emission reduction in the enterprises and to the transformation and upgrading in economy. Following the principle of risk controllable and business sustainable, preliminary statistics shows that by the end of 2013, the loan balance towards green credit in 21 leading banks institutions amounts to 5.2 trillion Chinese yuan, accounting for maybe 8.7% of total lending amount. Yes, CBRC has joined greatly benefit of in-depth cooperation in green credit with international organizations such as UNEPFI, World Bank Group, International Finance Corporations, and the WWF. So we are also hope to cooperate with all relevant organizations such as GIB, some other organizations here. Yeah. While studying and learning international best practice, we have also actively shared our experience in promoting green credit with our counterparts, including central banks of Vietnam, Mongolia, and other developing countries, which paid visit to China for the green credit work and formulated the similar regulatory policy in their own countries. In May 2012, CBRC and IFC jointly initiated and hosted the first International Green Credit Forum, providing a great platform for the countries, mainly from the emerging market, to strengthen exchange and cooperation in green credit. CBRC also played a leading role to establish sustainable banking network, serving as its founding chair on duty as well. The effort aims to develop a permanent and periodic mechanism for multinational exchange in green credit, which facilitates sharing and learning the practice in policy formulation, performance evaluation, and capacity buildings of green credit implementation adopted by financial regulators and institutions of each country. International communities share the same view to give full play the role of financial resources in promoting economic and social sustainable development. CBRC will push forward green credit vigorously and further cement exchange and cooperation with the rest of the world. So that's it. Thank you all.
I think in these last 15 minutes of this plenary, I would like again to invite you, the public, to either ask questions, because this is a little bit a more complex theme, but I think the real point which is on the table is, for developing all this infrastructure and the pressure we've seen in the first part of the session, we really need to foster investors' attractivity, and we heard some important criteria for that one from to the project owners, so they can actually share them. And I think we've also heard about the important initiatives happening in China around how you say, shaping the banking industry to actually also better use these possibilities and actually be a more important actor in this market. So I think I want to open the panel here for questions. So let's start here and then there. Yes, please.
Adam Nikolopoulos from ADN Capital Ventures. I've got a question. If we look at the demand of demand for capital and the velocity of project creation, most of the demand comes from emerging markets which need infrastructure, airports, gas pipelines, electricity, so on and so forth. What type of measures are you taking to make institutional investors comfortable with construction, performance, and delivery risk? Because most of the institutional investors are keen to deposit or park their money on income-producing assets. So that's...
Sorry, the two microphones. Can we have just one? Okay, perhaps Teresa, if you want to answer.
So, absolutely, emerging market infrastructure is a very live debate in BlackRock at the moment, and for us, I think at the moment we're trying to figure out what strategy do we follow in that respect. Interesting thing, actually, people have been investing in emerging markets for 20 plus years, and BlackRock as a business has a significant emerging market exposure in relation to the equity and the bond side of the business. So it's always useful to start with, from a kind of investment opportunity set. Emerging markets is not new to institutional investors per se. Emerging market infrastructure is probably a little newer. And as we think about how we develop a strategy in relation to emerging markets, there's a couple of things that's really important to us. I think the role of the multilateral banks is absolutely essential. They have to play a role in terms of, I suppose, dealing with the additional risk factors that might be brought into the equation. So be it first loss guarantees or be it insurance wraps, because at the end of the day, yes, you'll look for a higher return, but what you'll look at is you'll compare all of the key items with what you're getting in other markets. So, provisions around the sanctity of contracts are absolutely essential. Everything that I talked about earlier is in the bin if you can't convince someone that there's legislative provisions here that are strong, the contracts can't be changed, etc., etc. So I think the risk profile is different, but I would say for us, we're actually very excited about doing something in emerging market infrastructure because the need is immense. So as a result, the investment opportunity is also immense. I think, the challenge, for us is you can't really wait on the sidelines with some of this as well. Like sometimes you do have to be a leader, and as an equity investor, not all risk is going to be removed from the table. So I think it's important to remember that as well. But I think it's really important to compare the investment set with what you're getting in other markets and demonstrate how the key additional risks are mitigated. One additional point I would make, when we think about emerging markets, currency risk is right up there in terms of some of the issues that we have to navigate, because particularly in emerging markets, the local financial system may not be deep enough to provide the necessary hedge to mitigate currency exposure. So to the extent you're taking currency risk, you really want to start with the markets that have kind of strong financial systems, and in particular focusing on the markets that have current account surpluses as distinct to deficits, because that will really just provide sort of a natural support to the currency position. Final point, and I'll hand over to my colleague. I think for us, when we think about emerging market investment opportunity, it's probably more suited to the sovereign wealth funds in the Middle East and in Asia.
as distinct to European and some US institutional investors. So it's all about positioning it for the investors who have the relevant appetite.
Thank you. Are you showing? Okay, thank you. There was another question there.
My name is Hans Pleuger, Intelligent Energy, German passport, living in Shanghai. I feel challenged, especially by Mrs. O'Flynn, to ask you, you want to ensure the money entrusted to you for long term. I know no company having avoided risks by not going into innovation. On the contrary. And this conflict, I think you can't bridge. You want to avoid risk, but you want to be against innovation. How can you do that? Let me use one real example. I've been working as an entrepreneur on developing energy storage. And this word I haven't seen this word so far. And to me, it belongs strongly to the issue of infrastructure. But energy storage, especially when we talk about a decentralized future, a decentralized production of power, decentralized consumption of power, we can't do that. We can't get that without storing it. I have developed things like that with partners on an entrepreneurial basis. And believe me, it's damn difficult, if not impossible, to raise money for such a thing. And it's the big missing link in this whole chain, as most people would agree with me. But in reality, I can only assure you, you won't get the money. Certainly not from your end. That is what I hear. And I regret that very, very deeply. But please help me to get over this conflict.
So before, very good point. So before I worked at BlackRock, I worked for an independent power producer, a development business. So I really identify with the comments you've made there in terms of the difficulty, let alone for a new technology, but in general, the difficulty for businesses to get money to fund development. So you're really increasing it when you're talking about a new technology. What I can say to you from our perspective is I think the right place for that type of capital, it's probably more venture capital as distinct from institutional capital. Because again, when we think about it, so I represent the institutional investor, I represent for the most part the public and private pension plan. And when we're talking to them, I mean, they don't have appetite for development risk. So somebody else needs to fund development risk and technology risk. I think where the institutional investor can play a role is, and what we're seeing develop, some of the discussions we're having with developers is we're the takeout. So if you can negotiate a position which is if X, Y, and Z is achieved and de-risked, and we have this takeout from the institutional investor, that may help you get capital for the earlier part of the development or technology life cycle. When we think about technology risk, I mean, the utilities and the venture capital arm of the utilities is also another potential source of capital for that part of the equation. But I don't disagree with your point. I mean, I represent a part of the market. There are other parts of the markets that may be more suitable to taking technology and development risk, and it's an issue that needs to be addressed, without a doubt.
Thank you. And perhaps just to adding, I mean, I'm no more, but I've been 10 years president of a pension fund. The challenge you have as a pension fund investor, you need to generate very steady incomes over a long period of time, because that's the structure of what you have to deliver. And so I can only agree that there is limited possibilities for such vehicles to actually invest into these kinds of innovative opportunities. It's not that they don't appreciate them. They want also to profit from them at one stage, but the fact of the matter is, when you have to manage, I don't know, a certain amount of people, where you have to assure when they get to the pension, they have enough capital, and those who are already in the pension, you can actually pay with the capital you have their monthly rent, their monthly pension. It is quite a constrained model. So it is clear that those go more and more to its very steady, fixed income type of solutions. So
I must add, being innovation averse maximizes your risks.
I think this rewards an offline discussion. But anyhow, we had one question. No, I mean, because we have just enough time. It's not that I want to elude that one, but we have one question back here.
Yeah, I just want to add on. I fully agree. Let's say I understand the constraints of the investors, but looking at or hearing the talks of the last 1.5 days, I only hear PV, solar, and wind What about small hydro? What about CSP solar in combination with gas plants? What about geothermal? You need baseload technologies to compensate for the fluctuations of wind and solar when you do PV.
Yeah.
And I think a little bit more risk appetite would not be a bad action to start with.
Could you just quickly introduce yourself? Sorry.
Sorry, Omens from Perry Energy Consulting, Zurich.
Okay. You want to extend just quickly?
Yes.
Okay.
No, you're absolutely right. And I think we started, I suppose, as I explained in my presentation, we started with a very defined and specific strategy so we could actually demonstrate the business model and grow from there. I think one of the challenges when you think about smaller projects is scale, because whether we invest 10 million or whether we invest 100 million or a million, it's actually the same level of work and transaction costs that we face. So one of our responsibilities as a fiduciary, where we're safeguarding our investors' capital, is to deploy our capital efficiently. So one of the big challenges we always face is how do we fund the smaller projects? Because particularly in a European context, the reality is the projects are smaller. We do that by trying to pool portfolios of projects together and at least try and create some scale. I think the other technologies such as geothermal, the other technologies beyond wind and solar PV, such as geothermal, etc., are going to be part of our strategy in the fullness of time. But it was all without, I think when you're trying to, certainly our approach to the market was, this is a new asset class for our clients. Let's start with something that's very proven. Let's start with the easiest part of the equation to get the money flowing, and there we can build a business model from that.
Thank you. Would you like to add something? Okay, yeah, good, yeah. Just a second. We had one more question down here. Sorry? Okay. No, I understand. Okay, sorry. Okay, thank you.
It's Jeffrey Smith from ING Bank in London. I had two questions actually. First of all, I was interested in Teresa's answer to worries about predictability of regulatory regimes and stable cash flows. And the example you gave was that you compare it with the market price. So you wouldn't want to do a solar which was massively more expensive. That's specific to something where there's a market price. So how do you actually address it? I know it's not specifically your job, for example, in water regulation, because in water it's a monopoly supplier. There's not a market price for it. So the regulator could change the cost of capital assumption or something in the future. The other point I think was my now absent neighbour, and possibly also the Dutchman at the back. I think it's the same theme. I mean, the title of this session was infrastructure as an asset class. I had someone bend in my ear about this over a coffee yesterday as well. Everyone knows that there are long-term assets and long-term liabilities, and everyone thinks we can put the two together. But the problem seems to be that the individual projects are too small, particularly if they're startups, and yet the assets are not homogeneous enough in order to be called an asset class. And so unless you take money from the Prudential and then invest it with the Macquarie Infrastructure Fund, which seems a lot of middlemen, how can you actually put together an adequate portfolio to get some diversification when the individual projects are too small?
So going back to your first question in relation to water, and I'm not an expert in that part of the sector, but what I can tell you is, so our first strategy in renewable power is very much we're going to focus on markets that have long-term contracts or long-term fixed price, fit tariff regimes that are close to the market price. And when we have a decent portfolio, we may fold in a small amount of merchant risk. So in our renewable power portfolio today, we focused on France, UK, Ireland, US and Canada, and now we're beginning to fold in some exposure in the Swedish market, which is a predominantly merchant market, and you have some volatility there. So I suppose the importance of portfolio diversification is very important. We had a recent meeting of our investors, our annual general meeting, and we tested their pulse around, look, have you appetite for doing more merchant deals? Because the reality of the investing world that we're in is everybody's chasing the contracts that are the projects with long-term contracts, so the returns are falling. So if you want that higher return, are you willing to go up the risk scale in terms of the revenue line, or are you willing to go up the risk scale in terms of the development risk? And for the majority of pension plans and insurance companies, unfortunately, the answer to that is pretty limited. I would say the response from German institutional investors actually was more positive, and I think the reason is that the German institutional investors understand the space much more. I think it just all depends about, understanding the risk profile, and if there is some variability on the revenue side, it doesn't mean that it's not investable, but it may not be investable to a section of the market. I suppose going back to your other question then in terms of scale of projects, certainly our strategy has been, we're an industry team deploying the capital at BlackRock, so what we do to try and differentiate ourselves from some investors out there is to leverage our industry context, so people that we know in the utility world or the development world, etc. Because the challenge is, if you look at the big projects, it's great, it's an efficient way to deploy capital, but all the investors are queuing up for that project, and to the same point that I made earlier is you're driving the returns down. So I think it's important to be nimble. I think it's important to certainly think about how one can package the smaller projects to create some level of scale. You're absolutely right, projects are not homogeneous, but the structure as to how you approach them pretty much is, right? It's a real estate examination, it's an environmental examination. I think a lot of effort goes into negotiating transaction documents, so if you can at least try and negotiate some or create some efficiencies there by looking at a portfolio. The individual specifics of a project might be different, but the way we think about it is actually very much the same.
Thank you very much. At this stage, I'm really sorry we're running out of time now. It's time for the break. But I think I would like to thank, first of all, our two panelists with very interesting insights. We have now a coffee break, so you should not restrain from having further discussion with them. And please give them a good clap for the great contributions.